You ever wonder why price shoots up quickly, only to immediately reverse? It's not due to supply and demand. It's because that level was programmed into the algorithm hours, days, or weeks ahead of time. Using a proprietary prediction model, the algo targets indicator identifies these levels in advance. Triggers and targets work together to give us precise entries and predetermined exits. When price approaches a trigger, it may stall, reverse, or break through. When price breaks through, it unlocks a target. Algos reach for these targets while seeking liquidity. Knowing these levels in advance is the key to trading with the algos. However, algos don't care about time the way we do. They aren't trading 0 DTE calls or over-leveraged prop accounts that have to be closed at the end of the day. They have all the time in the world, and their goal is to shake as much money out of our hands as possible. Keep this in mind when choosing expiration dates for options contracts. Another way to reduce risk is to wait for a confirmation candle. This is a candle that opens and closes above or below a trigger level that shares the sentiment of the move. For example, for a long entry, we want a bullish candle to open and close above the trigger. This is a signal that the target is likely to be filled sooner rather than later. Okay, let's look at a few ways to outsmart the algos using triggers and targets. We've already mentioned breaking through and waiting for a confirmation candle. But what if we miss the entry completely? Maybe price moved too quickly for a confirmation candle to appear. In that case, we might look to see if there are other targets waiting to be filled. If not, we might consider taking a trade in the opposite direction after hitting the target price. Top and bottom ticking reversals is an excellent use case for targets. But what if price continues to range between the trigger and target after a confirmation candle? No problem. Since we already know the destination, we might get multiple trade opportunities in the direction of the target, taking profit in quick bursts. Finally, what if price never crosses the trigger? In this case, it means we saved ourselves from a losing trade. The algos decided not to continue in that direction, and their failure to cross the trigger gave away their next move. Typically, failing to cross a trigger means we are either entering a consolidation phase or about to make a move in the opposite direction. One last note, triggers can also display the destination price and percentage of the expected move. This lets us look ahead to see where price might go if a trigger is crossed. To see this data, check Show Destination Price in the Settings panel. As you can see, there are multiple ways to use a simple concept like triggers and targets to gain an edge against the algos. For even more advanced trading strategies, check out our video on anchors and projected ranges. Thanks again. Visit us at algotargets.com to learn more.